alternate market news to basically summarize everything, and you make your own decision from there itself. Let's take a look. Now, everybody, this is the monetary base that Federal Reserve have been using. It means the money they have versus the virtual 5,000 total market cap. Now, you can see very blatantly that when the money base in 2018 started to reduce, right, the stock market also pulled back then. Can you see? But when the pandemic happened, when they pump in a lot of money, the stock market reacted together. And to the point of almost incredible, when recently, when there's no more QE anymore, now to QT, the stock market actually followed through. So that means that right now, right, okay, the money that's pumped into the economy and the stock market is going together. Or can we say that, right, the stock market itself, right, is not performing without the money available. So if the money that is the monetary base is going to go down some more because of the monthly reduction, then what do you think the stock market will be having? Would it be going against it and start to be on its own and recover all the way up? Or you think the stock market is going to come down? So this is a very important question that you have to ask yourself, because I have already done my point here. Many people have been asking me again and again regarding about the portfolio, and I told them this, look, you have to be very careful because this is going to hit the market very, very hard. And of course, now we have more things coming up. All right, Bank of America. Now, Bank of America came in a very, very disturbing article saying that inflation shock worsening, rates shocks just beginning, recession shock coming, okay, according to this Bank of America Chief Investment Strategist, Michael Hartnett. All right, he's saying that, right, basically everything is going to go, all right, especially bonds and stock market is going to go down, all right. And his point is this, the current situation now will drastically increase risk ahead. And believe that, right, this 50 basis point is not going to be the end yet. So this from Bank of America. And of course, now this is really the one that really, really drives everybody's skin now. The Federal Reserve needs to inflict more losses, oh my goodness, more losses on the stock market in order to rein in the soaring inflation. Oh my God. Now this is from a former, okay, former means no longer around, yeah? And because of he said this is right, people are like, huh, okay. And this is what I told you, if the only way to bring down inflation now is to kill off the one that has the most money. And the market that has the most money now is not the bond market that's is coming down so fast. The next one itself is where? It's not the dollar. It is the stock market. The stock market now is the biggest chunk of meat that's available for everybody, and everybody is relying on it. So if let's say now, if Federal Reserve really want to go and reduce everything itself, the first thing first is to sell down in the stock market. So now we saw that the mortgage rate is going up. Yeah, home sellers fear that time is running out to cash in. So again, now this is the repeat of what happened in 2008. The same thing is happening right now, and people getting panicked. So the thing is this, guys. Well, now this is a PowerPoint mistake again. Hold on, that's a short one. Okay, take a look at this, guys. Take a look. Okay, so a lot of people says that now that don't worry, the stock market will be good because why? The Federal Reserve will always be there to save the day. You are getting it so wrong, my friend. Okay, currently now, do you think that the Fed officials, they will actually come in to save the day, or they will stand in together and say, you know what, let's save the economy together? Now, I think you may have forgotten this. I want to remind you now, everybody. Now, the last few years itself, right, the Federal Reserve officials, there are 13 of them, right? And of course, most of them are involved in the stock market. So they always want more QE, and more QE. So you understand why? But now, because of the last big little so-called problem happening, now what happened? If you've forgotten, let me remind you. The US Federal Open Market Committee, the FOMC, announced on Friday, that was back then itself, on the 18th of February, that it has banned its official from purchasing any individual stocks or sector fund holding investment in individual bonds, agency securities, and cryptocurrency. 18 February 2022. Don't forget that. So that means that this new rule applies to the board members, the presidents, the vice president, the research directors, the staff officers. So which means that, right, including spouses, all cannot, no? All right, everything cannot, and it will start in May the 1st. So now, if everybody is dumping their portfolio and not able to have it now, okay, or they must sell now on the way, do you think they will stand up now to protect your interests? Do you think that they will actually think for you? This is where it gets very scary, guys. 1st of May. So obviously, what would they do now? Think about this. This is really, you don't see this again. A lot of people have forgotten about this. They thought that, oh yeah, don't worry, the Fed will save the day. You are absolutely joking, my friends. You think they're going to save the day? You are joking. They already got out already. You think they will basically be bothered by you, whatever you have been doing? Think of it again. This is really scary, all right? Really very scary. So guys, oops, sorry. So now I want to bring this to you. Is that right?